you doing, everybody? Kurt Henry at the Mortgage Center. We are mortgage brokers, and this is just a behind-the-scenes look at if you're getting told no by your bank or a mortgage lender when you're trying to get a mortgage. My last video I talked about the fact that banks and lenders will look at your monthly payments divided by your monthly income, and that needs to generally be less than 44% in order to qualify for that mortgage that you're trying to qualify for. So if a bank is saying you're not qualified for that, it could be your credit, it could be some other issue, but often it comes down to this ratio. So the question, as a mortgage broker, we always go back to this ratio and we start to figure out, well, what's not working and how can we change that? So one of the things is often the income. So the income that a lender is using can be different based on what criteria they use for that income. So let's just say somebody was a salaried employee and they were making $100,000 a year. Well, that's pretty simple. That's, a simple salaried income. As long as they're not on a probationary period, they don't really have to be there for any length of time in particular. They could be there for 3 months. They don't have to be there for 2 years or anything if they're a salaried employee. So being a salaried employee, or if you're on a guaranteed number of hours per week with your work, then the income is pretty straightforward. Where it can get not so straightforward is if somebody is self-employed. Then self-employed is let's just say somebody makes $100,000 a year as a gross amount of income. And then they have their expenses. So they have their equipment, their supplies, their staffing, any expenses that they might have. They could have entertainment expenses or whatever the case might be. So let's just say somebody has $100,000 of gross income on their revenue for their business. But then they write off $75,000 in expenses. So then the net income is something around $25,000 in this case. So the challenge with somebody writing off all of their expense every year if they're self-employed is that the income that some banks and lenders will use when they qualify you for a mortgage is not your gross income, but it's your net income after your expenses. So if one bank is using the net income in this ratio, then it's going to have a much bigger impact on this ratio than if they're using the gross income. Now, there's also an in-between. Some banks will not use the net, they won't use the gross, but maybe they'll use somewhere in between. So every bank and lender can be different, but this could be a big difference on the ratio and therefore on how much you qualify for. So if you have any questions on that, feel free to give us a call. Number here is 905-436-8010. Thanks and have a great day.